Thank you. Have my air conditioner on. Thank you, Richard. Muting myself now.
Thanks. Roger that. Over and out. Good afternoon, good evening, good morning across the globe. Welcome to our presentation this week. It is an honor and a privilege to serve you, and I hope that by the end of today's webinar, you will have not only learned something, been educated in some way, shape, or form, but also been entertained as well. Trading ultimately is a very lonely activity. It's not often enough that we can get together and talk about these things. Friends don't seem to understand, spouses certainly don't most of the time. And so at the very least, we recognize the challenges of what you're trying to do. And it's okay. You're doing okay. Everybody, you're doing great. You're here. You're alive. No one jumped off a bridge. It's good. You're doing fantastic. Top of the game. And so welcome today in this crazy, unpredictable, who could have ever guessed, fill in the blank, what happened, is happening, could happen, who knows what will happen next universe that we all live inside of today. So you're doing great. Thank you for hanging out with us and spending time with us today. My name is Michael. I am the founder and co-owner here at Back to the Future Trading. We're celebrating our 13th year in business, serving traders in futures, forex, equities, and now cryptocurrency instrument classes. We have worked really hard to be honest and transparent and forthcoming with what we believe about markets and how our tools work. We are a predictive tool company. We are a predictive tool company. Hang on one second. Richard, you don't appear to be happy with my sound. I was told by Richard my sound is subpar. I don't want anyone to be happy. Does anyone else think my sound is muffled, difficult to understand, not good, or subpar? Everyone else, not at all, not at all, not at all. Okay. Well, I'm going to keep going. Thank you for the feedback, though, Richard. I appreciate it. Getting into this here, we've worked really hard to build an entirely predictive offering based on things that we know influence markets, primarily trading institutions like investment banks, the likes of whom you'll recognize the names of, people like JP Morgan and Deutsche Bank and Credit Suisse, and banks that used to take your money, hold on to it, give you a little bit of interest, give you a loan every once in a while, are now the financial juggernauts of our world. They receive billions and trillions of dollars in aid and TARP money and disburse PPP loans with wonderful fees that they accumulate ad nauseum. And every time the world's on fire, every time a crash occurs, every time millions of people are evicted from their homes or workers are displaced from their jobs, it seems funny, coincidentally, the banks are the ones who report record profits. And we believe over the course of 13 years of having observed this phenomenon, crash after crash, crisis after crisis, paid fines after paid fines, that trading isn't really trading. If you think trading is something you can study and apply yourself to, like some trade, a heating and air conditioning technician or a brain surgeon or an Army Ranger or a nurse, an airline pilot or a radiologist, where you apply your dedication and discipline, and eventually all the knowledge necessary floods to you where you become an expert, you'd be partly right, but mostly wrong. We believe trading is more like a casino. And these institutions, these financial juggernauts, allow the belief of randomness, this idea that anything could happen at any point in time, and if you just play the cards long enough, you'll get a couple kings and queens and aces and earn back your share. Well, we believe these banks leave patterns behind in the data, things that humans aren't geared to see. We're not hardwired to find. So the slight truth that markets are random gives the banks enough cover to hide their tracks. Now, what tracks are we talking about? The information buried in this historical data that we all have access to. You can load 30 days worth of 5-minute bars onto any chart right now. You could load 10 years of any daily bar onto any chart right now. But your brain says, okay, what are we looking for? Hey, what's this big white square with all this random junk in it? Is it a ill tic-tac-toe board? What's going on here? Is it a Rorschach test, a psychologist asking me, what do I see? It looks like my mom. What does that mean? It means we need to schedule you for some more sessions. It means that there's information inside what appears to be something chaotic and random. There's an entire subdivision of science called chaos theory. Chaos theory, which teaches there's really nothing random, that it's all interconnected and linked, and the patterns, especially those in nature with regards to human behavior, are pretty findable. They're there. And so when you look at a chart, your brain doesn't see the fact that there are times where this market is moving with frequent regularity. If I told you, for instance, that the euro dollar has been going up between 5:30 and 6:30, 7 out of the last 10 days, your curiosity might be piqued. What if I told you that the Dow futures have been consistently rising between 10:07 and 10:17? You would say, no, there's no way. If everybody knew about it, it would stop working after a while. Well, there are patterns in the historical data after 13 years of working with traders based on time. And so our software looks for those patterns and flushes the times that have occurred lately with frequent regularity to the surface. It shakes the box of popcorn so the Cracker Jack prize rises to the surface. Who remembers Cracker Jacks? Give me a Y if you know what a Cracker Jack is. If you think it's a racial slur, you're in the wrong webinar. So what we do every week for 13 years, nearly 600 webinars later, we publish the outputs from the indicator for customers to evaluate every week. And we give out the times, the historical times, for markets like the E-mini S&P, oil futures, gold futures, the DAX, euro currency, the Dow futures, the E-mini NASDAQ, euro US dollar, pound dollar, Ethereum. Exactly, Jerry. And then we come back together to see, did the signals work at all? Did the signals work at all? Was there any type of consistency with the signals? And that's what we're going to be looking at here at this chart in a moment. We're going to look at all these different charts and see what were the regular irregularities. Exactly, Jacob. Jason rather. Jason says, I realize I still struggle with this belief, but if I follow my trade plan utilizing the time signals, I'm profitable. There's a part of your brain that doesn't want to believe that someone is screwing us on a grand scale. It's true. They're not going to lower a banner on Wall Street saying, hey, pay attention at 10:16 today. It's not going to happen. So we're going to hack our own way into the country club. We're going to write our own invitations to the party. We're going to write our own invitations to the party. So let's start by talking about these signals and what this information means. Let's talk about these signals and what this information means and how it got here, right? How did this stuff get here today? So one of the most popular markets is the E-mini S&P. Most traders who trade futures are watching it. If you're trading forex, we'll take a look at those in a moment. Crypto as well. We'll look at equities as well in a minute. But first, I want you to understand what the software is providing us. Your computer on your desk in your office gets these times, and these times actually appear on live charts. And everywhere you see a signal that is blue, and you'll see them days in advance, right? We've had this chart since Tuesday. And this information was a warning signal for us for Thursday. Hey, Jim. All of the signals on the top, Jim, were warning us about potential selling pressure. The software had discovered times, not made up times or thought of a good hunch about the times. The software had said, hey, for some reason or another, lately, whoever's in charge of the casino has been pushing prices down at these times. These are all Eastern times, by the way. Your times will appear local to your computer clock time. And conversely, all of the times that were near bottom lines or white lines were warnings that for whatever reason, who's ever in charge of the casino, these times lately have been pushing the ES on a 3-minute chart higher, buying pressure. And so we have a time map. A time map. Be careful at 12:39. Be careful at 9:42. Be careful at 1:42. There's a landmine there, maybe. Any questions about this or how it works? Sandra says, hey, why do you have a color bias? Well, Sandra, instead of green or red or pink, you can change the colors, by the way, to any color you want for anything that's output. You can make them white and black, yellow and purple. But the reason we do that is because we're nerds. And Sandra, I want everything, for our company at least, to appear magical and futuristic. And one day I'm going to walk into my office and hold a magic frisbee in the air. And my electronic father is going to shoot a blue cascade of laser light down upon me for having blue and white information on my charts and in my presentations. So that's why everything is blue and white. I want the software to look as futuristic as possible because it is futuristic. But we have colorblind customers who change it all the time to whatever they want. Yeah, Jim, you're going to want to make an appointment with Jacob and look at something that he's been working with. Jacob, can you get with Jim and make a one-on-one with him and show him the you-know-what? The 3-letter monster. All right, so let's come over and take a look at the ES in a couple iterations. Yeah, Stanley, you can change it to whatever you want. It's not a problem. You can come here. Now you can see it a little deeper. Yeah, that's the one, Jim. So on the E-mini S&P, we've been tracking the big movements of the market using this software. And I want you to see that this works on a daily time frame. And over the past, we've been watching for moves, most of which have occurred. We're watching for buying pressure on November 29th, selling pressure on December 31st, selling pressure on January 13th, buying pressure on January 27th. We were watching for selling pressure from February 7th until January 22nd. We had an intermediate signal that we tracked in this webinar on March 8th. We had another signal at March 22nd. And now we have the cascade of signals. A selling pressure signal on April 7th. We predicted a brief intermediate up move on April 18th. We had a bottom move with this pattern 4 signal on April 26th. And this one, guys, was a failure. This white signal did not produce the move we were expecting. Absolute failure. It hesitated for a day and then fell apart. And now we are here on May 18th. And May 18th was expected to be a selling pressure move. The next signal is on May 25th. May 25th is the next buying signal. So we're expecting selling pressure on a daily chart for the next 6 days. I want to talk about something you had the opportunity to evaluate. We had the times for the E-mini S&P today on a 3-minute chart and a 5-minute chart. And this one's going to be a little tricky because price was consolidated all over the place today. But I'm going to go over this with you the same way so you can see what happened at the signal times. And to help me do that, I'm going to need to draw some yellow lines and point out some of the obvious moves. Okay. Number one, the move down that was expected at 1027. And when I say expected, I want you to remember what we're dealing with. Again, Sandra, these were the times that I published on Tuesday, right? And can you see, guys, the signal here for 1027? The same one that I'm referencing, Sandra, on the chart over here. Okay, so you know I'm using the signals you ladies had since Tuesday. And then I want you to see what happened at 1045. I want you to see what happened at 1112. These are small moves. The one at 903 is a small move up. 924 and 942 are failures. The banks didn't do what was expected. But once the market gets going, this is intraday, remember, small scalping moves. 1127, look at what happened. 1127, we were expecting the market to rise higher. Yeah, sure, we did too. We did too, Sandra, because it was in the direction of the trend. But we were expecting a long move from 1127 until 1142. And even though it didn't continue that direction the entire time, Bill, can you see here how the market put in a pivot at 1203? Sandra, would I be out of line to say that the market did go up at 1203? It didn't follow through forever, but in this instance, from the close of that candle until here, it went up over $500 per contract. Okay. When we got to 1239, the software since Tuesday had asked us to look for selling pressure. And where the market had consolidated for a period of time, it broke down and fell apart, Jim, into the bottom at 1251. So far we have 1, 2, 3, 4, 5, 6, 7 signals in a row that moved in the direction they were expected to. Now here we are, we're still in lunchtime. Ready? I'm going to stretch out the chart a little bit so we can see these. These were small moves today. The beast was asleep. And I'll stretch this down so we can see it a little bit better. But now check it out. The candle here does go up. So here's the low right there. And now we have 1, 2, 3, 4, 5, 6 candles in a row, Sandra, where it does that same thing. It bloops up. And so here, from the close of that candle, the market goes $500 straight back up again. And it finishes, ready? Here's the open. There's the close. It finishes higher than it started. Lunchtime signals, right? And then at 142, we have one of those weird little blips where it does go down. It's hard to see it on a crazy day like today. And I'm not going to count this one, but it went down again over $500 per contract before going higher. So on here, Sandra, I'm going to put an X on this one because it kind of wiggle waggled before it went in the other direction. Now at 242, can we all say in the direction of the trend that that signal, Sandra, went up until the next signal here? Yeah. And then we have what I call normal behavior from the banks. Right here, Jacob, they tripped out the stop for the high of day. They tripped out the high of day stop. And what was the software warning us would happen at 254 since Tuesday? Anyone? What was the software warning us would happen since Tuesday? Selling pressure. Until when? Until 3:30. And here's why people fail. Everyone was convinced we were going higher. The reality, banks allowed a run stop, a stop run, a head fake to create liquidity for their shorts. Remember when everyone was still buying mortgages while the banks were selling them short in 2008 and 9? Remember when everyone was buying mortgages with adjustable mortgage rates and the banks were shorting them when they knew the collapse was imminent, profiting off of future doom and gloom? Right here, first move, they start to come down. And then, Sandra, all of the people in this candle, all of the people in this candle are being allowed to go higher. Stop after stop after stop's being placed. Where is it being placed? Right underneath this candle, right there. And then the banks say, okay, we have enough. And they start hammering on the sell orders the entire way down. So when I look at this in the entirety of the day, I want to ask a question. And I want you to be honest with me because we promised at the beginning of the webinar we would be honest and transparent with each other. Would it be okay? Would it be all right with everyone here, including the most aggressive critics of the technique? Would it be okay if I said the accuracy of these signals, not trades, the accuracy of these signals was somewhere in the 60 to 70% realm. So here's 0, here's 25, here's 50, here's 75%, and here's 100%. We know, I'll admit, it's not 100% accurate, but we know it's not 0% either. And looking at this chart, it's working way more than 1 time out of 4. So is it all right if I say, hey, right here, 60 to 70 maybe, is that okay with you? If we just look at this result for today on this market, and I'll pull this back and let you look. Is there anyone here, and I was raised by a stern woman in a Catholic church. It's okay if you tell me I was wrong. I am married to a half Cuban, half Italian, quarter Sicilian woman. And every day of my life, no matter if I'm right or wrong, she tells me that I'm wrong. Is there anyone here who would say, no, this didn't work at least 6 out of 10 signals? Please, I'm honestly asking. No. Okay. By not saying that, by agreeing with this, we're in essence agreeing to a statement. We're corporately agreeing to a statement, Jacob. Right? Well, Jim, that's a trade setup. I'll show you the difference between a signal and a setup. We're agreeing these times, we'll talk about the difference between a trade and the signal. We're agreeing these times worked 6 times out of 10 on average. They were 100% predictive since Tuesday. That means somebody executed a plan. The software told us what times to watch for. You've had those times since Tuesday. The only reason those times existed is because over and over lately, not quite all the time, but way more than none of the time, somebody was pushing prices up with the white line times and down at the blue time lines on this chart and this time frame. There's no other way the code can put those times there. If they didn't have any shenanigan-based activities, then they wouldn't appear on this chart. The fact that they're there means 12,000 lines of code. Our own little artificial intelligent person said, whoa, 1127, what's going on here lately? I'm going to warn the trader. It's happening way more than it should. And then when we got to these times, somebody executed a plan. This is our code. Yes, Sandra. And way more times than not, that plan did come through. And you can see for the majority of the US Open, this doesn't count the London session, Sandra, right? Because I had London times on there too, didn't I? Let me check. Yeah, we went back to 333. So Sandra, these are the times from the UK session. And would it be okay if I included 409 and 227 and 445 and 518 and the bottom at 536 and this move at 621? And even though this was right before the report, it went down here. No, and no, and no, and yes. Are we still in the 6 out of 10 if we include the mother country? Yeah, still 6 out of 10. But when we get to the big boy, when we get to the US session, it looks like we found somebody sticking their fingers in the cookie jar. Now, Jim mentioned that his trading percentage was 52.5% today. Now, that's the difference between a signal and a setup. Can I let you in on a little secret? No two of you trade the same way. And Jim, when we first started doing this, we told people there was only one way to trade with these signals. And we lost hundreds of orders over the years because nobody wants to trade the way I trade, the way you trade. Jim trades differently from Mark, who trades differently from Dave. You all use different things. So we teach a very specific setup for the purpose of evaluating our signals. We teach a very specific setup every week to evaluate the efficacy of our signals. And we show that rule set in a video that's included with your purchase or with your invitation to the webinar. It says here, we'll also be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. This video provides an overview explanation for these. And then I link to a YouTube video. I tell you that we're going to use a 1.5 volatility stop in using the trend entry and the puncture trade. So Jim, let's talk about your 52% because I think there's something really important about that. Let's go look at yesterday's signals too, because I want to make sure we're covering all of the chimichanga data right here. So yesterday, Sandra, we had a bad day. You had a bad day. You're taking one down. Whatever that song is. It was a bad day yesterday if you were long on anything. So there's two signals that we teach in that video to evaluate a setup. A setup is a basic rule set for trading. It involves an entry, words are hard, an exit, a stop loss. It's essentially, what do you do at the signal? I love shorts, by the way. They're my favorite trades. I love bearish markets. And so here's what a signal with trend is. Sandra, when the moving average, in this case in the video, I tell everyone a 120 period EMA, which is not magical. We did not consult the forces of darkness. We have not scattered chicken bones on the floor to determine that there's anything supernova-like about a 120 EMA, Echo Mike Alpha. It just happens to work really good. We've been using it for 13 years and would seem weird if we stopped using it. I'd challenge you, if you've never put a 120 EMA on your chart, watch how markets react around it. It's pretty awesome. But all the signals in the direction of the 120 EMA are trend entries. So if it's blue, thank you, Sandra. I have a lot of falsetto songs that I can sing. You just have to ask nicely. Is Melissa here? If Melissa was here, I would sing it. She's my muse. No, I don't see her. You may be my new muse. We'll see. Let's take it slow. All the signals in the direction of the 120 EMA are signals with trend. So let's put a note there. SWT. Sounds like a new rap band. Yo, 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 SWT in the house. Everywhere you see a blue dot, Sandra, is a signal with trend. That's a time that the software has been warning us since Tuesday that there's likely going to be what? A down move. Selling pressure should be exerted again at these times. So when we arrive there, the entry is at the close of that candle. The entry is at the close of the candle. The stop loss is 1.5 average true range values above the high of that candle. 1.5 ATR values above the high of that candle. Any closer than that, 1 ATR, for example, is market noise. It's how far the bar is moving on average every 3 minutes. So ATR, average true range, invented by a market technician named Wells Wilder, who wanted an accurate way to measure how far is a bar moving every X number of minutes. Yeah, everything here prints out automatically, except the text I'm drawing. Sandra, it's Sandra. It's all printing here. On bar, open. Sandy, I love it. You're the one that I want. You are the one I want. Ooh, ooh, ooh. That's Sandy from Greece, I think. So here, the entrance is the close of that candle. The exit, Sandy, is going to be the opposite signal. So if you're long at 1221, do you understand that empirically, we're going to hold this thing until the first time the software has noticed banks usually step in to take profit or push prices higher. We're playing with a time window, a window of time where the bank vault should be open. We stick our little greasy fingers in there, grab as many nickels, quarters, and dimes as we can while the door is open. And then, Sandy, we have an idea of when that vault is going to close. Yes. Now, when you say you try to hold, Carl, if the stops are very large, you know what you can do? You can make them smaller. But Carl, when the market's selling off and one of these candles is $400, the volatility is at historic highs. So Carl, you can go to a micro, right? You want to reduce your risk, you can go to the MES. You can go to the MES and trade 2 microlots or 3 microlots, half the risk. You understand? I don't know your personal financial strengths or weaknesses, what your capitalization is. Some people, they have a $100,000 account. That stop is nothing to them. Some people have a $10,000 account, and that stop is everything. We've used this stop, Carl, in the demonstration as long as we've had it. You can adjust it. Everything is adjustable. The point I was making with Jim is this. If you enter and exit by the next time, we start to see that, I'll put the winners up here. Sandra, we finish in the green more often than we don't. So we enter at the close, we exit at the close. We enter at the close, we exit at the close. Jim, it's a good one to work with. Yeah, most people work with the 3 or the 5 on the ES on an intraday basis. So on this chart, Sandra, if you start adding up those signals, 15, 18, 28, 29, let's call it 30, 60, 90, 95, 100, and let's call it 100 ES points. Equals $5,000 hypothetical per contract with a large contract or $500 per contract with a micro lot. Yeah, I told you you wouldn't believe it. That's why we give you the times in advance, though, so I can't jury rig it. The other signal is called a puncture. You know what a puncture is? I'll show you one. A puncture says, hey, this 939 signal, Sandy, was supposed to go up. We were expecting to see this, right? Either the candles holding their own and consolidating and going up a little bit, or going sideways. Now, what don't we want in a downtrend if we're trying to short? Who do we not want to see? Anyone? We don't want to see any buyers. So here's the logic of a puncture trade. Number one, this is a time where institutions historically push prices higher. This is the stop that usually contains that price. So Sandy, at 9 o'clock, you can see we sell off and then people are taking profit. It's almost as though buyers are coming in and keeping it from going any lower. Jim, do you understand that analogy? People are taking profit in here and keeping prices from falling. Okay, this is based on a very old accumulation distribution philosophy. It's over 100 years old. The same thing happened at 1024. Buyers are coming in and saying, thank you very much. Nope, thank you. Thank you. No, I'm cashing in. New sellers are coming in and then it drops. Well, Sandy, what happens if no buyers step in? What if they abandon that position? What if all of the institutions at 939 say, no, it's still going. We're not taking profit here. Well, here's what a puncture trade says. If in a downtrend, price violates the white dot, right? I like to put my entry one tick below that 1.5 ATR stop line. If price violates that, then we go short at the stop, at the sell stop. I'm short because there's no buyers here. Same thing happened on the open. Yes, sir. And so then I put my stop one tick above the puncture candle. One tick above the puncture candle. Now, I have two options here. Most people follow option one. I believe in option two. I can hold it until the next signal. I enter short here. I get out by 9:54 is another $200. It can be a large bar. Over here, some customers will use a 1-to-1 risk-reward ratio. And so, Sandy, can you see if they risk X number of dollars, they go for Y number of dollars on a puncture? Because it's still a time where the buyers usually do something. So you can do a 1-to-1 RR, or you can do get in and hold it. Now in the video, I teach the get in and hold it method, so I have to hold myself to that. But I wanted those of you to see the puncture trade for the first time, that option as well. The next puncture, Sandra, you see it over here? There's originally a push up, whoop, whoop. And then right here, here's another signal with trend as a puncture. We punch through that stop line. The stop goes one tick above the puncture candle. If you use the 1-1 RR method, your target is hit right here. If you get in and you hold it until the next signal, you still walk away with $100. So Jim, generally speaking, there are customers in three camps. all of you knuckleheads do things differently when you trade. We did a survey and found out 60% of profitable customers trade a form of trend trading. 20% of profitable customers trade tops and bottoms. And then the other 20% is kind of miscellaneous. You guys use order flow, volume, profile, you consult a medium, you have a mouse in a cage that runs in and out of a box. If he runs in the right side, it's a buy. He comes out the left side, it's a sell. Y'all do some weird stuff. But most of the customers, Jim, that trade a trend setup have statistics that bear out over time. So a trend trading customer has an expectancy somewhere in the 50 to 55 percentile of the expectancy. They have a profit factor somewhere in the neighborhood of 1.5 to 2.0. But the only things they use are some form of a trend filter, like a moving average, and the time signal. So 2 indicators. The top and bottom traders that use a counter trend setup have an expectancy on average that's closer to 65 to 70%, but their profit factor is somewhere between 0.9, 1.0 to 1.0. They risk 5 ticks to make 5 ticks, $5 to make $5, $4 to make $5. But they also have a volatility thing like a Bollinger Band. They have time. They have divergence. They're using some type of overbought, oversold indicator, as well as a support and a resistance line. So Jim, those customers have as many as 3 or 4 times the confirmation tools to achieve their profitability. So Jim, 2 years ago when we gave a class, a demonstration, my partner Ron, that you know, did a demonstration on the E-mini S&P 3-minute chart, and he showed it over 900 executions. And Jim, if you look at 24/7 Globex entries, 24/7 Globex entries, the profitability of his model was 54%. And do you see that the profit factor was 1.5? And the model had a positive expectancy using nothing but the time signals and a moving average. That was 2 years ago, right? And so I had another customer. She wanted to know what the expectancy was on the NASDAQ. She traded it on a 1-minute chart. And so I showed her those same results. And over 90 days, using the same setup, right? Signal with trend. Jim, can you see the 2 curves kind of resemble each other? Consequently, this is the one with no trend filter, just signal to signal for the US session. And they can be higher. For example, during the Asian session, when a lot of people are at home eating supper or hanging out watching TV, he did a breakdown on that, and he showed during the London session, the win-loss ratio was 53%. The profit factor, this is the London session, was 1.3. The Asian session, it was 1.8, nearly 2 to 1 on the risk reward, with a profit factor, with a win-loss ratio of 56%. So Jim, in a trend trading setup, the model has a consistent expectancy and profit factor. And again, this is the way that most customers and traders I've met execute their trades. What direction is the market moving? And whether it's 2020 or 2022, the results bear out those same kinds of, here's January 1st until, gosh, April, January, February. Jim, you see there's a lot of executions here, right? A pretty big sample all the way down to March. I think it was April of this year. A pretty big sample size. So there's a difference between the signals and the setup. And so if we're applying this to these markets that we've given you the times for, Sandra, do you see how that might be a benefit in a market like crude that a lot of you trade? Short at 433, short at 512, short at 609, short at 705, short at 918, stopped out, long at 939, long at 1054, long at 12 o'clock, long at 1:30. If you have a choice and you're using the software, I would highly recommend the easier thing to trade. Because how many of you would agree with me, the more tools you have on your chart, the more opportunities your subconscious will try to talk you out of the position. Does anyone else experience that? The phrase that they use for this is called analysis paralysis. Analysis paralysis is a term thrown around in the industry, right? How many signals can I expect to see? So Sandra, what's your weapon of choice? What market do you trade? Because there's an answer to that question that's specific to you. CL. All right, so you see the CL chart for today? It comes with a volume knob. Knob in the sense of how many moves do you want to see per day? And right here, you'll see a parameter called swing strength, and it's the number 8 on my chart. It might be a little small, but it's a number 8. The smaller that number is, the smaller the moves the software will look for in the past, and the more frequent the number of moves will be in the future. So Sandy, if I take this and I change it from 8 to 4, watch how many signals populate my chart. There's a few more of them, right? But some customers want to see more signals. You're scalping maniacs. And then there are customers that don't like that. I prefer to see larger movements overall, Michael, in the crude futures. Your chart seems very complicated to me. And so, Sandy, when I changed it from an 8 to a 16, there were half as many signals and the moves were larger. Do you understand what I did there? We've told the indicator, the algorithm, go back and find me times where bigger moves occurred. Generally speaking, and your software, I believe, has a default value of 8. That value gets us to about 2/3 of the actual market turns and moves in that 60–70% range, where if there was a turn at 7:45 and a move up at 6:45 and a bottom somewhere around here, I want an indicator to find it for me. Now, the signals on lower time frames will also give you smaller moves in a shorter span of time. So CL on a 1-minute chart, you can use that as well to look for intermediate moves. You understand? So you can either use a smaller time frame for smaller movements. The times will be at different times. Or you can change your swing strength What does 10-minute crude look like? You can change your swing strength to find larger or smaller moves to suit your personality. Here's a 10-minute CL chart, Richard. And that gives us an opportunity to look at what the future holds. So here, Richard, I'll take this one on a 10-minute chart and I'll lower that. Let's go from an 8 to a 6. And the 6 seems to get us better in the ballpark. Now on this chart, why do we care about you purchasing or not? Because Sandy, look, Richard, everything to the right of that white line is predictive. No other company can do this. It's the reason why we have 3,000 customers, right? Everything to the right of that white line looks suspiciously like the information in the email you received from us. This is a probable sell time. And then he has a little brother over here. This is a probable sell time. And then right here, Sandy, there's the next buy time. And there's the next buy time. So you're literally seeing the landmines in terms of the time map in the future. And it doesn't matter if it's a 10-minute chart or a daily chart or a 5-minute chart. The signals all behave the same way. And so it works that way with gold futures. Sandy, these were the times we gave out for GC. And you can see on the way up, again, we're taking advantage of that trend trading model. We're getting in these signals. We're holding them until the next window closes. And we're kind of booking those profits along the way. And then the market kind of slows down and you're still chunking away at it. But Richard, I have the signals in the future ready to go, right? We're the only company that prints the signals on the right side of the chart. No one else does it because it's hard. We're engineers. We don't know better. We love hard. We love solving problems and helping people. We're horrible marketers. If you're looking for a good marketing company and a slick guru, you are in the wrong webinar. We own the right side of the chart. So if you're an equities trader, for example, and you're trying to look for options trades, calls and puts and all of that fancy shenanigans, we're the ones warning you when those signals are coming. If you're looking for puts with Alibaba, you can see the right-hand side of the chart has the times coming up on the right-hand side. We're the only company telling you what Alibaba should do next. If you're trading Apple, I met with a guy today who has a trading advisory service with thousands of subscribers, and he's a horrible person. He's very arrogant. We scan the web for social media and who's looking at what stocks and what the feelings and sentiments are. Horse cocky. It's garbage. It's all garbage. We're the only company who's telling you when the next moves are coming in Apple and where those signals are correct 6 times out of 10. And you look at the chart and you say, wow, it was warning me in advance. It was warning me of the call at 6:28 and September 1st and October 11th and 26th, and the call on December 20th, and the one on the 2nd of February didn't work out so well, but the one on the 8th sure did. And boy, did this put really work out on the way down. And all of these times in the future are waiting for you to wait for them. We're the only company that's warning you in the future. Tesla is one of my favorites because Mr. Musk is one of the ultimate manipulators. He loves to manipulate his stock. And so you can see where the bottoms are, where the tops are, where the bottoms are, where the tops are, where the bottoms are, where the tops are, and now here's the next bottom. And he manipulates his own stock, and the government doesn't stop him because it's the only game in town launching military satellites right now. Let's leave him alone. Let him make a few bucks. He's not hurting anybody. And so that very same thing is happening right now in forex. If we look at the euro US dollar, there's thousands of articles about what's going to happen next and which signals are going to work. And if I look at the euro US dollar on a 60-minute time frame and I spread them out, Sandy, it looks a lot like our ES 3-minute chart. And I can know in advance when to be at my computer to trade. I don't have to sit there like a zombie staring at the screen. Is this the signal? Is this the signal? Are they going to do something? Is my arrow going to pop up anytime soon? Is this the signal? Right, and you kind of become a trading zombie. Waiting for entry. No, I know exactly when the next signals are coming up because we're awesome. We have the best software in the world for traders. This works on crypto as well. If you were wondering what Ethereum was going to do on a daily chart, we had our puncture. There it was. You had a signal with trend on May 27th, and you had a puncture to go short in Ethereum at 23.96. The next selling signals on May 25th, June 13th, and so on, July 7th. Any questions about this? Any questions about this? So when we come back together and we answer the question, did this thing work or not? I haven't found an example yet, Sandy, where I could point to it and say, geez, I feel bad showing this to these nice people. It clearly stunk. Boy, that was a stinker forecast. We haven't found one yet. Because ultimately trading is about one thing. What's going to happen in the future? What will the price of corn be in the future, or wheat? Wouldn't you like to trade wheat futures right now and know when's the next push up? Wouldn't you like to trade oil and know when's the next push up? When is JP Morgan about to drive this thing up again to $110, $120? You can know. It's in the future. And the only way to know what's going to happen in the future is to track their behavior patterns in the past. That's really it. And we've been trained, we've been conditioned, we've been mind manipulated by marketing machines. You need my near zero lag wackadoo indicator. You need to sit at the feet of our guru, who usually has a Russian or a European accent. Okay, today we're looking for the short using my 25 years experience. You all should be lucky that I'm here sharing my secrets with you. Most of you are sick of that. That's not a predictive signal. That's some guy somewhere telling me what to do. Yes, Doug. Now, that's not usually the optimal signal, but it's good for most of the time. Trading is about what will happen next in the future. And so there's a difference here. If you want to be proactive, I know how much I'm going to risk. I know how long I'm going to be in the trade. I know how long I'm going to let it run, and I know where my stop's going to be. We're kind of the only solution for that. If you want to be off balance with a virtual opponent who punches whenever they want and doesn't play fair, banks are consistently fined for market manipulation, dark pools, high frequency trading. Spoofing is in the news a lot lately. And they pay fines, billions of dollars worth of fines. And we tracked it one year. They pay $1 for every $3 they make. They pay $1 in fines for every $3 they make. It's a pretty good racket. But that's the thing that we're offering you here today. Do you want to know in advance, or do you want to sit there on the edge of your seat with bloodshot eyes, losing more than you make every day? This is the reality of our situation. This is the reality of our situation. And the only way to see these kinds of things, in our opinion, is to use the times of the manipulators against them. Use the times of the people who rig the markets against them. If you don't believe this is happening, and you're running around on the yellow brick road with your friends in your trading account, and there's no wizard behind the curtain in your world, God bless you. If you're doing just fine without all of us and the tool like this, more power to you. I want to live in that world where everyone plays fair and is nice to each other. I do. I wish that world existed. And I had to change my assumption 15 years ago to align what was happening with my experience with trading with the reality of the world I was operating in. Engineers want to understand why things work. What are the rules? Why does this lawnmower turn that blade? And when it stops working, what's wrong? Markets aren't markets, they're casinos. That's why 90% of people fail. You'll never know the rules because they're not going to tell you. The problem is they have a weakness, one we can exploit with the software. 12,000 lines of code will always find the times that banks move. When you move the market, you have to leave a swing behind you. The problem is nobody believes those times were relevant. They're watching their stochastic, they're watching their volume, they're watching their moving average. Oh, the 20 just crossed the 87. And all the while you're missing the forest for the trees. These times are matter. They're important. They leave a temporal trail behind that advanced modern day, not your grandma's indicator, find and tell you about in the future. Right? So you can't use an indicator that worked great in 1996. Well, I used the 38% Feb with a 121 extension on the move. Okay, how's that working out for you? My dad used to drive a Volkswagen Beetle too. The engine was in the back. I don't want you to be this guy. Don't be this guy. Stop it. Don't be this kid. I want you to be this guy. Let them do the lifting. Let them do the heavy moving. Let them push the air away from your trade and sweep you up behind them. And if you're a trend trader, right? If you're looking for those entries, there's less tools, less indicators, fewer cluttered charts to have to deal with. I want to be on your team. I love this chart. I watched Formula One racing when COVID was around on Netflix. It's bananas. That guy pulls in and count them. There's 20 people. 20 people supporting that guy. And every one of them are an athlete, an engineer, a scientist, a fuel specialist. I want to be your supporting cast member so you can win Best Actor or Actress. All we've done for 15 years is think about this. That's all we've done because of what we believe. It's based on time. If you track the people who manipulate the thing you want to profit at, and you keep a record of when they cheat, and you show up when they're likely to do it again, and you answer in a webinar, yes, 6, 7 out of 10 is okay, and you see the profits on a signal for a market like CL 2 days later, and you look at what's happening in a market like gold, and you're adding up all of those signals, It's less of an emotional decision and more of a financial one. Do you want to make more money than you lose? And if I'm in your position, I want to know if anyone who bought the software had that experience. And so a few years ago, we started investing in a program called Trustpilot and asking customers to share their experiences with us. And you can see we're coming up on 100. For every 1,000, 100 people or so leave a review. And so far, these are all card-carrying, confirmed, receipt-bearing customers. No one of them is fake. They're all real. They live in a house. They have a phone. You can call them. They'd love it for you to contact them so they can tell you, this is amazing. Today, I could not believe, well, actually I could, when I saw the undeniable precision of the time signals created days in advance by the time warp indicator. Mariana has a software. She bought it. She bought it at a webinar, just like you. Ian loves to quote Tina Turner. It's kind of weird. And the more you go down, the more you'll see anyone who wanted to leave a review has generally said pretty nice things. Try it, learn it, use it, and you'll love it. I couldn't believe it. And here we are. It seemed too good to be true. So the people who sat in the chair that you're sitting in watching the webinar you're watching asked to make the same decision you're making. I've had a pretty good time of it. That's why we work as hard as we do to show you what we've shown you. Our belief is that markets are based on movements in time, predictive movements in time. These large and small movements are known about days, months, weeks in advance. We can use these charts on 5-second charts, range bars, wrinkle bars, volume bars, tick charts. You can use them on daily, weekly time frames for your SPY investments, your 401k IRAs if you want to monitor that, your position in Apple or Tesla or Bitcoin. If you want to know when the next Bitcoin surge is likely to occur, look at the software. Great time for buying those cryptocurrencies now, if you believe the market's going higher again. Would you like to know when? Based on the premise of a 1,000-year-old concept. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. So, to go one step further and one step beyond, I've invited someone back. He'll be here every week. He's here for all your questions. A customer who went through this webinar. A customer who sat through the same things I've said and shown you here today. A customer who bought the software and used it for himself, and then qualified for a funded account from a third-party prop shop. He's here today. Jacob, is your microphone on?
It is now. It is now.
It is now. Jacob and I have become close friends. I like him. He's honest to a fault. He's full of more energy than a nuclear reactor. And I don't know anyone who's studied trading as much as he has or back-tested systems and models as often and as deeply as he had. And so I'm offering you here today a resource, him to you, his own time, his own volition, to not only show you what kinds of experiences he's having with the tool, but to also help you understand what's involved with getting started, what opportunities there are for a promo code at the end of his demonstration. He's got one for you, so it's even less money if you sign up today, Sandy. And just to let you know what his experiences were with us, good, bad, and indifferent, to give you a sense of the things that other customers have written about in the past. So before I pass them along to you, thank you for your time. Thank you for hearing me out and for watching these times with us this week. 13 years in business this May, 3,000 customers, every major financial market in the world. I'm stuttering like Amber Heard's lawyer right now. Sorry. Topical reference. Guys, this stuff just works. Eagle Scout honor. The stuff just works, and I hope that you'll take advantage of the offer Jacob has here for you today. So Jacob, I'm going to give you the screen and the reins. Thank you everyone for hearing me out. Please listen, if you're a customer too, Jacob is also going to follow up with you at the end of this webinar and tell you about some opportunities he has to work with you one-on-one in mentoring capacities and train you with the software in ways that go beyond the basic training. Guys, thanks again. Jake, it's all yours.
How's it going, everybody? Thank you, Michael. Appreciate it. Does everybody see my screen? Michael, everybody, good? There's me and my dog up in Tahoe. Spent a month, it was like March or something. March up in Tahoe at my buddy's cabin while my daughter was in Australia. So yeah, the reason I mentioned the Tahoe is that's actually when I qualified for my first Apex funded account. I was up there and actually had some time for myself, and I had just learned about combine trading or prop firm trading, and that's where I did it. Finally succeeded, and now I'm working on multiple other accounts, and I'm using the software. Imagine that. There's my daughter. A lot of you guys have, a lot of you folks have already seen these pictures. There's my daughter Charlotte and my dog Lexi, and that's pretty much that's my immediate family. Well, I got my mom, Charlotte's grandma, that comes around every once in a while. Let's talk more about trading. This image right here, I like to show it every week, and it just kind of makes me take a breath and realize how far I've come. Because I don't know about any of you folks, but I've been these put down samurais before, one too many times. And since coming to Back to the Future and trading and purchasing the software and using it every single day for, I mean, in September it's going to be 2 years, I don't feel like the cut down samurai on the side of the path anymore. I feel like the guy walking away. Before, yeah, anyway, I don't think Michael showed this this website. I just screenshotted this what was I, I don't know, a couple weeks ago or something. I mean, the banks, they just keep, it's fascinating, absolutely fascinating. They just keep paying their penalties. Government's like, yeah, no worries, just keep doing what you're doing, just keep paying the penalty fees, and they'll just keep doing it. They're never going to stop. I want to be on the side of the banks. I've always wanted to be on the side of the banks. And once I started watching some of the YouTube videos, that's how I found Back to the Future, actually. Searching around for more info on the SHAF indicator, the time, supposedly a time-based leading indicator. It's not, but down there at the bottom of the YouTube search was Back to the Future trading. And I clicked on the video and my life was forever changed because I watched a lot of videos and I studied, and every amount of scrutiny that I had, I applied to those videos, and it just made sense to me in the end. And I purchased software and I've never looked back. This is what I basically felt like before Back to the Future. Then I knew I had a choice to make. I saw what I saw, and I knew that it was my best chance. My psychology could still, you know, I mean, blatantly just screw me over. I could just start revenge trading or whatever else, but at least I will know where my trade opportunity windows are. I will know something. And this is what I feel like now, before and after. Before, after. This right here is an automatic equity curve that was printed out, something that the boys are working on. And if you, when did this get on to my desk? 3 weeks ago or something. This is a screenshot of the equity curve. The coolest thing about this is that it was printed out from the software. It doesn't have the ability to do that at this time, but it will soon. 4 months of trades, 2,688. This is the NASDAQ 1 minute trading. There's no trend rules. All this is simply signal to signal. There's so many better ways that we can trade this system. But worst case scenario, you have an equity curve that looks like this. We could do way, way, way better than this, but just that alone, I mean, that's enough to convince me that we have an edge. Finally, actually have an edge. I've done extensive amounts of back testing. Here, let me show you guys something else too. This is kind of new stuff here. Check this out. We're not gonna have time. Well, I guess we could have time if you guys want to stay here for the next 3 hours to go over all of this. But this is Ron's, Michael's partner, Ron's equity curve summary of the trading room, the pro trading room that you can also join if you purchase the software. This looks like it. You guys can screenshot this and check it out later if you want. I'll leave it up for a second so you folks can do that. This looks like it's from the 1st of the month till 17th. He just sent me these a couple of days ago. He's crushing it using the software. And there's, I don't even know how many other people in Ron's trading / training room that are also crushing it. Legitimate results. Let's see, so this is, I don't know, what, two and a half weeks or something. This is from the 1st of January 2021 to current. Profit factor 1.47, Sharpe ratio 116. Some people care about the win percentage, 62.95. That looks like an edge to me. That looks like an edge. Yeah, you can see your max drawdown. That max drawdown's for over the year. It's not like one trade was max drawdown 25,000. And then let's see what else. I'll show them all real quick. I haven't done this in a webinar yet, and I actually haven't studied these too much. I just know that the software works. So what is this? January to current. Oh, okay. January to current. 63.73% profitable. Total net profit 50,000. This is just one mini contract per position. Ron will scale in every once in a while on certain trades. He trades the Russell, crude, and the ES on 3 to 5 minute time frames. Highly recommend getting into Ron's trading room once you buy the software. It's very beneficial. He's a wealth of knowledge, probably close to 2 decades of trading experience the guy has. You can ask questions and you'll actually get your questions answered in the chat. One of the things I love about Back to the Future trading is there's real people. Michael and Ron are real people who actually care and will call you on the phone to discuss things. I will call you on the phone to discuss things. We can set up a screen share meeting. If you have any desire to learn more about the software before you buy it, please give me a shout. I'm going to put a link to, I already sent out a few, I didn't have all the time in the world, but I sent out a few little messages in the chat window with some links to my calendar and whatnot. But anybody who's not a customer, I'm going to reach out to you. Looks like there's a few of you today via text or email or give you a call or something. And I'm also going to put my calendar link in the chat, so you can just schedule a 15-minute appointment if you want, or an hour, whatever it takes. I want to help everybody. That's literally the main reason why I want to do this job. I love talking to people about trading. Yeah, I trade the markets every day and I make money, but that doesn't take me all day. Okay, so I think you got a screenshot of that one. Let me go ahead and put that info in the chat right now before I forget. I'm gonna put my cell phone in there, my email address, link to the calendar. Boom. Oh, that looks like it just went to Wes. Sorry about that, Wes. I'm definitely not an expert at this whole webinar thing yet. Entire audience. There we go, and Control V. Try that. Okay. All right, so let's see what's behind door number 3. Ooh, a pretty equity curve. This is Ron's equity curve in the room from January 2021 to current. So that's a what, a year, almost a year and a half. Look at that thing. You buy the software, enter the room, you get access to all the recordings, and you can see that none of this is fake. It's not. It's absolutely not. And then what is this? January. So yeah, the last five and a half months. I feel like it's even getting better. I don't even know how that's possible. And just imagine, I don't know how many of you folks know about the Ryan Jones scaling method, fixed ratio. If you were to scale an equity curve like this with fixed ratio scaling and money management, I don't be caring about the state of any economy, except your own. Look at that, it's ridiculous. Okay, I get obsessed with, look, it's just so beautiful. Okay, what's the next on my slide thing? Let's see here. Let's see if anybody has any questions real quick. Software use time sets up. Oh, I gotta scroll all the way down. Oh, goodness gracious. Jim, yes, call me tomorrow to talk. Awesome. What does Ron trade? I think I just answered that. He trades or maybe you missed it, Stanley. The crude 3-minute, Russell 3-minute, and ES 5-minute. I'm not sure if I have the minutes right, but it's between 3 and 5 for each of those markets. Oh, this is the equity curve that that I screenshotted from when I was up in Tahoe when I qualified. Well, I screenshot it when I got back, but this is the activation account. Okay. There's a bronze print. Oh, we already went over that. There's my email. Oh, bonus material. Before we get into, I want to show you guys these setups that I've been. We were talking about setups. How many people are still here? Yeah, is everybody still here? Oh yeah, look at that. Everybody's still there. Nice. On the edge of your seats. Great. I'll try to just go for another like 10 minutes or something. Before, let's see. Yeah, so Michael was discussing how the times on the chart, the dots, those are windows. Those are signals. Those aren't trade setups proper. There's a multitude of different ways that these signals can be traded. This is the setup that after a year and a half, geez, almost closer to 2 years, I guess, that I've been working with lately. It seems very simple and distilled, and there's no other indicators. It doesn't get, there's no pattern definitions or anything. It's just straight beautiful Zen simplicity. These are the actual trades that these are the actual trades that I made today with my Apex account on the NASDAQ 3-minute with micros. I had 2 micros per position. Ended up with $716. Yeah, and I actually missed a few setups because of doing other work things. Is anybody interested in me explaining what my setup is? I explained it last week, but yeah, I'll go through it real quick. It's not really that complicated. One of the lines here you might not have, I don't think you saw on the software can do a lot of really cool stuff. Michael is showing the simplest possible methodology and functions of the software possible. So everything's just easier to teach and cleaner, but there's so many cool things that the software can do. One of my favorite things that the software can do, this line here, this is called an open price line, which is it's a little bit of a kind of a misnomer since it's actually the close of the candle price line, but we call them open price lines, or I call them OPLs. A bunch of us call them OPLs. That's another thing. You buy the software, then you'll become part of a family. a family of traders who actually talk to each other, and yeah, it's so much more than just the software. So I love these open price lines. Powerful support, powerful resistance. I mean, you can, I don't know if you folks can see, but to me, I can see it. I can see the power in just these few open price lines here. The system that I've been working on here, let me see if I can find the simplest trade here. No, this one. So there's punctures. Boom. Let's not talk about this one. These are the actual trades that I literally just took. Here's a puncture trade. We are in a selling window. I have a candle that closes below the open price line. Here, let me move this down a little bit so you can see the dot. There she is. 1209. At 1209, I knew this dot was coming from 6:30. I'm on California time. I knew this dot was coming from 6:30 a.m. I knew that was going to be there. We're in selling window. I like to think of them as windows, not just spots to go short. I'm going to follow this is the 120 EMA, same as what Michael was showing everybody. I'm going to wait for a puncture of the 120 EMA in a selling window. And I also need my candles closing below the open price line. Otherwise, I'm not shorting. So block number 1, candles closing below the open price line. Block number 2, candle closes below the EMA. I'm going to market enter short right here at the close of this candle, as close as I can get it. I think I got this one actually pretty close. Kind of fun to see how close you can get these market orders on the NASDAQ, because there can definitely be slippage, but that's why God invented stop losses. And this is a little Fibonacci tool that I made. That instead of using the Ninjatrader risk reward, I just don't really like it. You can't have multiple targets with the Ninjatrader one. If anybody wants to, anybody who's interested in the software wants to have a screen share meeting with me about the software, I will also let you know how I did this Fibonacci thing. But I don't feel like going into it right now. I can show you real quick if you care. Price levels, and then I just made these percentages and then colored everything appropriately and through the, anyway, I don't want to get too much into that. So the entry is at the close of this candle, which was basically right here. The stop loss goes above the wick of the puncture candle. Then I have three positions actually. The first target is here, the second target is here, and the third position runs all the way until the next dot. I can't remember exactly why. Oh, I know why. I actually got out of this second position early, and then it looks like I closed here at pretty much the right time at 12:42, and that was the last trade of the day, and that's how I got to the 716. Does anybody have any questions? Explain. Oh, okay. Yeah. All right, Jim. Thank you. How do you get the ratio tool to work like that? Here, I'll show you the settings again one more time. It's not the ratio tool. It's a Fibonacci. It's a Fibonacci retracement. And then you go to your price levels, and then you put these prices in, percentages in. It's actually kind of a little bit of a pain in the butt to explain, but if anybody wants to give me a shout privately, we can go over everything. Yeah, I don't have the energy to explain it. If you put these percentages in and then color everything, you'll figure it out. Really just don't have it in me right now. Okay, let's get rid of that. So yeah, that's my basic setup. This trade right here that I took was interesting. This is a little bit of a newer setup that I'm working on. As you can see, I shorted here before I got a puncture below the 120. This is just an example of how flexible this software is. I know the main thing that I want to know is if I can trust that there's a good probability that this particular window in time will be a selling window. Does that mean it absolutely will be? No, but there's more of a probability that it will be than it won't be. Right here is actually the, okay, I'm gonna show you guys something. It's a kind of extra bonus. Check this out. I'm not sure if anybody's ever used the opening range indicators. It's free on Ninjatrader ecosystem. Check this out. This automatically plots the high and the low of the first 10 minutes from the open. So from 6:30 a.m. California time to 6:40 a.m. California time, and then it plots the mid. It's a little frightening how well the support and resistance works. Let me get rid of that giant margin here real quick. Yeah, check this out. Let me just clear all the drawing tools real quick. Drawing tools, drawing tools. Okay, let's show you the beginning of the day. Pretty cool stuff. No, that's not it though. Look at this, look at that. I mean, all you gotta do is just look at it. This is a typical NASDAQ range day. And I primarily trade the NASDAQ, I mean, 99%. I know these days now, thankfully. And the opening range indicator, you can find it on the Ninjatrader ecosystem. If you shoot me an email, I can find the link and email you the link to the, I don't have it pulled up though, and I don't even know where it is. But the other thing that I wanted to show you guys, and it is just how something simple, another support and resistance system like the opening range indicator, in correlation with time warp signals, like this 812 signal, for instance, right at the top of the opening range high, banks short. I feel like the banks and the institutions really like the opening range support and resistance. I've been studying the heck out of it actually for probably 6 months now. Okay, now check this out. This is actually really, really cool. If I can find it. Oh no, oh, I deleted it. Okay, here, hold on. A couple more minutes. I get excited about this part. That's the Fibonacci. I'm just gonna take this and I'm going to load my load and octaves. And all this is just a Fibonacci tool that I've put a lot of lines on. Anybody can do this. Shoot me an email. And I think there's a way that I can send the file that I made. I've done it. I did it once with my brother. I sent him a Fibonacci tool that I make. I kind of get a little into the Fibonacci things. But not retracements. I don't really care about those. I use Fibonacci for other reasons. So check this out. If we just divide, this gets really trippy, and then to use it in correlation with time warp signals, if we just divide, let's put that at the bottom of the range, and then we're just going to divide the high of the range and the mid of the range by 50%. Does that make sense? Pretty crazy amounts of support and resistance. So like this trade, for instance, I'm just like randomly picking a trade. I think I actually took this one. Oh yeah, this is the one that I was, I think this is the one that I was referring to earlier. Oh no, it's not, but this is one that would have worked. Because I get a close below the top of the opening, the high of the opening range, I would consider this a valid short. But imagine not having time warp right here. Looking at a stochastic or a MACD, I don't think so. RSI, I can't even imagine going back and having to use those kinds of lagging indicators instead of something like warp. No way. No, thank you. I would stop trading. I just wouldn't trade anymore. And then we get a close below the open price line, even better. But I mean, here you could short right at the close of that candle, throw your stop at the top of the wick here. So we have 939 selling pressure signal. We got a candle close below the high of the opening range. Candle closes here, market entry short. Yeah, there'll be slippage. You'll have that. Target 1, target 2, right on the money of the 120 EMA. Look at that. So this is the midline here. Midline. That might be a little hard to see. I'll move that just a little bit. And then here's the low. Look at it come back and kiss this low, kiss this low. Massive amounts of support and resistance, and it all correlates with, look at all these open price lines right here, all in a row. I really hope whoever doesn't have the software, I really hope that you get it. Give me a shout. There's a discount code. We can talk. I think that's probably enough. I don't want to keep you guys too much longer. It's like a lot of you guys are still here. That makes me happy. Do you guys like that opening range thing? It's pretty cool, isn't it? Yeah, thanks, Carl. Do you trade the NASDAQ 3-minute? Yes, I do. 3-minute and the 1 minute. 1 minute tends to drive me a little bit insane after a while. Every time I go back to the 3-minute, I can just take a breath. Like, okay, I really like the 3-minute. Yeah, I mean, just look at this. Look at it. It's crazy. It's crazy. And then we pull out. Oh yeah, see, this is I love this one. We pull out of the opening range. This, you know, the opening range deal on a trend day, it's not going to matter as much. But on a range day, trading warp on a range day with something as simple as this opening range indicator. You don't even need the indicator. You can just draw it on your chart. It's not that hard. And then extrapolating the distances. So this is 50% of the high, of the mid and the high. And then all that does is just extract all that Fibonacci tool that I made. I call it GAN octaves. All that does is just extend the lines up. You could do this all by hand. It's not that hard. But yeah, because we have a time warp signal here at 11:39, you could go long right there at the close of that candle. You're definitely gonna take some heat. I would have my stop probably down here. Underneath the 120. What I've been playing with lately is actually having my stop on the midline here. This is kind of a nasty little stop run in a sense, I think. Optimally, I would rather have a close above the the high of the opening range, then a close above the open price line. Then, this is the last thing I'll show you guys tonight, then a pullback to the opening price line. Then we go long. So you can market enter here for a long, or wait for a close above, then a pullback to the open price line, then go long. And then you could have your stop placed below the high of the opening range. Just some ideas. I mean, there's so many cool ways that you can incorporate a system, I mean, your own trading system into something like time warp. Okay, I'm gonna show you guys the selling page so you can buy the thing if you want, please do. You'll do yourself a serious favor. Where is that page? Here we go. Look at that for a second while I get this other thing. Where is it? Open range expansion is very cool, isn't it? Thanks, Jim. Actually, take credit for that too. I didn't have nobody show me that. I made that thing up myself, and it seems like it works too all the time. It's especially useful in ranging days like today. Today, I don't know. Did any of you folks actually trade today? It was a gnarly day. On the NASDAQ at least. What do I need? I need to post, before I forget, I'm gonna post the discount code in the chat. I think you guys have all the info that you need now. To entire audience, okay. And then here is the time warp page. So if you go to backtothefuturetrading.com, you get, this is the landing page, then you go to the product store, then you go to the product store, then you go to Tacheon Time Warp. It's crazy how slow my internet's going. Then you read all the stuff if you care to, but after watching the webinar, you might be able to just skip all this stuff. Go down to the bottom, click your buy now button. Don't worry about that price. I saw the price and before I bought it, that 2 Septembers ago. And at first I was like, oh, $2,500, I don't know. And the more I thought about it and the more I meditated on it, the more I realized that that's nothing. It's just not really that much money in the terms of what we do for a profession, trade, swing or day trade. $2,500. Now you can lose so. I mean, I don't think I need to explain anything to you folks. So this page will take you. So there's a $500 discount code too, by the way. So this is going to get the price under $2,000 at $19.95. You can click the buy now button here, and that will take you to what I highly recommend, which is Ron's Pro Training Room. Tuesday, Wednesday, and Thursday from 8 a.m. to noon. Customized, optimized workspaces and settings. Oh, I almost forgot to mention when, because I know you folks know what to do who don't have it. When you purchase the software, you get free included installation and all of the basics. Basically, Rachel from Back to the Future will go over everything with you one-on-one on a screen share. We call it like a white glove installation. Then you'll get time with me. And I think Michael's still giving out some of his time too, as far as I know. Get it while it's hot before he goes on vacation. Yeah, so you get personalized service and you get to call me back a week later if you have questions. And we can set up another meeting if you want. You know, it's not just like, oh, sweet, they bought, okay, bye. No, it doesn't work like that. I wouldn't be working with these guys if that's how it was. So you could either buy now or go check out the Pro Training Room. Let's see what that does. I think okay, yeah, it's the blah, 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 blah. And then this is where you'd put the promo code in, warp off. Here it is. Oh, there's my Skype too, by the way. It's Jake Royal. I can put that in the, I don't know if anybody's from out of country. I think everybody's maybe from in the country. Limit time, pro code, warp off, all lowercase, WARPOFF. You get 2 lifetime licenses, so you can install it on 2 computers, lifetime updates. Oh yeah, then there's the free video archive. There's so much training. You could go crazy with the amount of training. But I'll also teach you the exact setup that I've been using, and we can check it out on whatever market that you trade. We'll find the right chart and the right settings, just you and I, and we'll make it happen. So yeah, I've developed a really simple system with multiple positions. I'll show you that one, or you can use any of the systems or system that Michael and Ron have developed as well. Yeah, so you put the warp off in there. Let's make sure it works. Warp off, apply. 1995. PayPal, pay later. Oh, I think that's like it's like some credit with PayPal. Anyway, just do it. Whoever, I mean, all you customers who have it, you know, you know that it's worth it. Let me make sure there's no more questions, and then I'm gonna let you guys go. Thank you so much for hanging out with us. Love you guys and ladies, everybody. We'll see you next week. Let me see, make sure it says spring expansion. Did you trade the MQ today? Yes, I did trade the MNQ all day today with micros and made 700 something. Show contact info again. Okay, absolutely. 1 second. And then Michael Lee, I sent you a message with my contact info as well in the chat, just in case you don't have it. Where is my contact info? You can tell hopefully you can tell I'm a trader and not a webinar presenter guy. This is what I do all day. I stare at these things. Please, but if you're on the fence about buying the software, please give me a call. I would love to yap with you for an hour about how amazing all of this stuff is. That's what I want to do. I don't want to try to convince people of this, that, and the other and say, here's the buy now button. I will, because I want to have a meeting with you and show you how awesome this stuff is. But I really just want to have meetings and screen share and have insights, and I get to learn stuff too, because you folks have a wealth of knowledge. It's just such a, I am just feel so blessed to have this role with Back to the Future. I mean, what's really interesting is I didn't even ask for it. Ron and Michael came and asked me. So, okay, contact info again, where is it? Here it is. I'll show it again. So there's all of the, oh yeah, one-on-one training with me, there's that. And then where's my contact? Oh, here we go. Jacob at backtothefuturetrading.com. Yeah, that's a really long email address. Phone number is 858-205-7827. That's a San Diego area code. I'm actually in Santa Barbara, California. And yeah, I think we should be good to go. You're welcome. Thanks. Thank you, everybody. Absolutely. Okay. Anybody else have any questions? Are we good to go for this afternoon? It's 3 o'clock and I need a meditation before you folks start calling me. Just kidding. You can call me right now. And okay, got it, Mike? Okay. Thank you, Michael. All right. We'll talk to you everybody later. See you guys next week. I hope to see some people who aren't customers as customers next week. And I want to hear some success and meet with you and just, yeah, let's get it going. Let's get it going. Oh, look at that. My Apex account just reset, ready to go for tomorrow. Heck yes. Okay, everybody. Happy trading. Good night. Over now.